8:47 a.m. Tuesday morning, Kansas City, Missouri. The Charles Evans Whitaker Federal Courthouse sits quiet on Grand Boulevard, its limestone facade catching the first gray light of an October dawn. 3 blocks east, inside a 12-story office tower clad in bronze-tinted glass, the Regional Processing Center for the Internal Revenue Service is just coming alive. Janitorial crews finish their rounds. Security guards rotate shifts. A handful of early arriving analysts swipe their badges at the turnstiles on the ground floor. None of them notice the 4 black Chevrolet Suburbans that roll past the building at 6:51 a.m. None of them notice the tactical van that parks in the loading bay at 6:53 a.m. At 6:58 a.m., 22 federal agents wearing FBI windbreakers and ICE Homeland Security Investigations vests enter the lobby. They carry sealed federal warrants. They carry sidearms. They carry hard drives, evidence bags, and the authority of the United States District Court for the Western District of Missouri. They are not here for a routine audit. They are here for the man on the 10th floor. His name is Director Marcus Halberd, a 26-year veteran of the Internal Revenue Service. The walls of his corner office are decorated with commendations. A framed photograph shows him shaking hands with 3 successive Treasury secretaries. His official biography describes him as a tireless steward of taxpayer integrity. His annual performance reviews call him exemplary. His subordinates describe him as demanding, meticulous, and beyond reproach. By 7:14 a.m., Director Halberd is in handcuffs. By 7:31 a.m., federal agents have seized 15 desktop computers, 9 encrypted laptops, 3 external server towers, and 17 bankers' boxes of paper records. By 8:02 a.m., the first count begins. 1,500 fraudulent tax files, $2.1 billion unaccounted for. This is the story of how a man trusted to safeguard the federal tax system became the architect of one of the largest internal fraud schemes in AIR's history. This is the story of the agents who caught him. And this is the story of how the rot spread further than anyone first imagined. The investigation began 9 months earlier, in January, with a single anomaly. A junior compliance analyst named Rebecca Chen, working in the IRS Treasury Inspector General for Tax Administration office in Washington, flagged an irregularity in a batch of refund disbursements processed through the Kansas City Regional Center. The refunds, totaling $4.7 million, had been issued to 12 separate employer identification numbers belonging to shell entities incorporated in Delaware, Nevada, and Wyoming within a 6-week window the previous summer. Each shell entity claimed pandemic-era tax credits. Each claim was approved within 72 hours. Each refund was wired to offshore accounts in the Cayman Islands, Belize, and the United Arab Emirates. Chen filed her report on a Friday afternoon. By Monday morning, it had been buried. It would have stayed buried. Except that Chen made a copy. She took it home. She sat with it for 3 weeks. And then, on a Tuesday in early February, she walked into the Washington field office of the Federal Bureau of Investigation and asked to speak with an agent specializing in financial crimes. The agent assigned to her case was Special Agent Dolores Reyes, a 14-year veteran of the Bureau's white-collar crime division. Reyes read the file. Reyes pulled the case numbers. Reyes ran the EINs through 3 federal databases. Within 48 hours, she had identified 83 additional shell entities tied to the same scheme. Within 2 weeks, the number had grown to 417. Within 2 months, the FBI had opened a coordinated investigation with Homeland Security Investigations, the Treasury Department's Financial Crimes Enforcement Network, and the Office of the Inspector General. The case was given a code name, Operation Hollow Vault. What they found, layer by layer, would reshape the federal government's understanding of insider fraud. The first layer was the shell entities themselves. Investigators traced the incorporation paperwork through registered agents in 3 states. The shells had been created using the names and social security numbers of deceased individuals, harvested from publicly available death records and cross-referenced against historical tax filings to identify deceased taxpayers whose final returns had shown legitimate business income. This made the fake businesses appear plausible on paper. The second layer was the refund routing. Each fraudulent refund was processed through the Kansas City Regional Center under expedited review codes that bypassed standard secondary verification. These codes existed for a legitimate reason, to fast-track refunds for taxpayers in federal disaster zones. They required director-level authorization to apply. Director-level authorization had been applied 1,500 times. Every single application bore the digital signature of Marcus Halberd. The third layer was the money. The $2.1 billion did not vanish in a single transaction. It moved in carefully calibrated tranches, each one falling beneath the automatic currency transaction report threshold, each one routed through correspondent banks in Panama, Cyprus, and Mauritius before splintering into hundreds of subordinate accounts. Forensic accountants from FinCEN traced the movements across 43 jurisdictions. They identified real estate purchases in Dubai, a private aviation leasing company in Malta, and a controlling interest in a Cypriot shipping firm. They also identified $312 million in cash withdrawals that simply disappeared. The fourth layer was the worst. Director Halberd had not acted alone. You might ask how a single man, however senior, could authorize 1,500 fraudulent refunds without being detected by the layered oversight systems that govern federal tax administration. The answer is that he could not. The answer is that he did not. The answer is that the system itself had been compromised. By the time agents executed the search warrant on October 14th, federal investigators had identified 7 additional IRS employees as co-conspirators. 2 were senior compliance officers. 3 were data systems administrators with access to the agency's internal audit logs. 1 was a regional supervisor in the Austin Processing Center who had replicated the Kansas City scheme on a smaller scale. The last was Halberd's executive assistant, who had served as the conduit for encrypted communications with external accomplices. The external accomplices numbered 14. They included a former Treasury Department contractor who had helped design portions of the IRS's modernized fraud detection software, 2 attorneys who had structured the shell entities, and a Miami-based money launderer with prior convictions in 2 federal districts. They included a sitting state senator from a Gulf Coast state who had received $4.3 million in campaign contributions and personal disbursements in exchange for legislative inquiries that pressured the IRS to expedite certain refund categories. They included a vice president at a regional bank in Missouri who had ignored anti-money laundering protocols on a series of suspicious transfers totaling $87 million. By the morning of October 14th, all 21 targets were under simultaneous surveillance in 9 states and 3 foreign countries. By 7:00 AM Central Time, the coordinated takedown was underway. In Kansas City, Director Halberd was escorted from his office in handcuffs past the cubicles of the analysts and clerks who had reported to him for years. He did not speak. He did not resist. According to the arresting agent's later testimony, he asked only one question: whether he could retrieve a framed photograph of his daughter from his desk. The request was denied. The photograph was tagged as evidence. In Austin, the regional supervisor was arrested at her home before her children left for school. In Washington, the 2 senior compliance officers were taken into custody in the IRS headquarters parking garage at 8:00 AM Eastern Time. In Miami, the money launderer was apprehended boarding a private aircraft bound for Quito, Ecuador. ICE agents had been tracking his movements for 11 days. In the Gulf Coast state, federal agents arrived at the senator's home at 7:00 AM local time. Cameras from a local news affiliate, tipped off by a sealed but leaked warrant filing, captured the moment he was led to a federal vehicle in his bathrobe. By the end of the day, 20 of the 21 targets were in federal custody. The 21st, an attorney who had structured the original shell entities, fled to a non-extradition jurisdiction in the Caucasus. He remains at large. The press conference began at 4 p.m. Eastern Time on the same day, in the briefing room of the Department of Justice in Washington. Standing at the lectern, the Deputy Attorney General delivered remarks that would be quoted across every major news network within the hour. Today, the Department of Justice has dismantled one of the most significant insider fraud conspiracies in the history of the federal tax system. The defendants charged in this indictment betrayed the public trust at the highest level. They used the tools of their offices, the access granted to them by the American people, to enrich themselves at the expense of every honest taxpayer in this country. The total loss to the United States Treasury exceeds $2.1 billion. The damage to public confidence in our institutions is incalculable. Beside her, the director of the FBI added a brief statement. This investigation succeeded because one analyst working at her desk refused to ignore what she saw. It succeeded because the men and women of the Bureau of Homeland Security Investigations and of our partner agencies followed the evidence wherever it led, regardless of position or rank. Let this be a message. No badge protects you from the law. No title places you above it. The indictment, unsealed that afternoon, ran to 483 pages. It charged the defendants with wire fraud, mail fraud, conspiracy to defraud the United States, money laundering, structuring transactions to evade reporting requirements, identity theft, computer fraud, and in the case of the senator, honest services fraud and bribery of a public official. The combined statutory maximum sentences exceeded 200 years per defendant. In the weeks that followed, the layers continued to peel back. Forensic accountants identified an additional $340 million in fraudulent refunds that had not been included in the initial indictment, processed through the Austin Regional Center over the previous 4 years. A second superseding indictment was filed in December, adding 3 new defendants and bringing the total alleged loss to $2.44 billion. The IRS announced an internal review of all expedited refund authorizations issued by directors at every regional processing center over the past 7 years. The review, conducted by an independent panel of former federal prosecutors, identified procedural vulnerabilities in 12 of the agency's 17 regional offices. Recommendations for systemic reform were submitted to Congress in February. The Treasury Department announced new requirements for dual authorization on all refunds exceeding $100,000, mandatory secondary verification for refunds wired to offshore accounts, and real-time anomaly detection on all expedited review code applications. The new system, deployed in March, identified 14 additional cases of potential fraud in its first 30 days of operation. The state senator resigned from office on October 18th. He pleaded guilty in February to conspiracy and bribery charges and was sentenced to 9 years in federal prison. The 2 senior compliance officers entered cooperation agreements and provided testimony against their former colleagues. The Miami money launderer, facing a 4th-time offender enhancement, was sentenced to 28 years. Marcus Halberd refused to cooperate. His trial began in late spring. The jury deliberated for 11 hours. The verdict was guilty on all 47 counts. At his sentencing hearing in July, Halberd was given the floor to make a statement. According to the official court transcript, he said only this: "I have nothing to say." The judge sentenced him to 43 years in federal prison. He will be 81 years old when he is eligible for release. The court ordered restitution of $2.1 billion, an amount that will almost certainly never be recovered, given that more than $312 million remains entirely unaccounted for in jurisdictions beyond the reach of American law enforcement. So what does it mean when the people charged with protecting the system become the people who loot it? What does it mean when the systems built to detect fraud are subverted by the very officials who designed them? When elected representatives accept payments to pressure regulators? When the most senior career officials in the Federal Tax Administration use their access to steal from every citizen who files an honest return? It means that institutional integrity cannot be assumed. It must be enforced. It must be audited. It must be defended at every layer, by every employee, against every temptation. Rebecca Chen, the analyst whose refusal to look away set the entire investigation in motion, received the Department of the Treasury's Distinguished Service Award in a small ceremony in March. She has declined all media interview requests. According to colleagues, she still works in the same compliance office. She still flags anomalies. She still files reports. She is, in the words of the Deputy Attorney General, what every public servant should aspire to be. The agents of the FBI and ICE who executed Operation Hollow Vault returned to their other cases. The investigation continues. 14 additional individuals remain under sealed investigation in connection with the broader scheme. More indictments are expected. The bronze-tinted glass tower in Kansas City still stands. The 10th floor corner office has a new occupant, a career civil servant promoted from within after passing a rigorous independent vetting process. The expedited review codes now require 3-factor authentication and live audit trail review. The fraud, in its specific form, cannot easily happen again. But somewhere, in some other office, in some other agency, there is another Marcus Halberd. There is another vulnerability. There is another scheme already underway. The question is whether there will be another Rebecca Chen to find it. The question is whether the rest of us will support her when she does. Pay attention. Ask questions. Demand transparency from the institutions that hold power over your life. Because the cost of looking away is measured in billions. And the cost of looking, as one analyst proved on a Tuesday in February, is nothing more than the courage to make a copy and walk through a door. That is how this case began. That is how the next one will end.